Hi, this is Zach May with the normal edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday the 25th of May. Starting off with the FTSE 100, which had a nice bounce actually off the initial May resistance around 86.40. I suppose we had an overshoot to the downside at 86.04, but that actually underlines the way that that broken resistance line there, which is heading towards 85.80, is the line in the sand that we should look at. Above that, looking for the highs or record highs towards 9,000. Below that, then maybe the 50-day line and 84.80 as potential downside. And the RSI at 62, so just cooling off from the bull trap that we had through the March resistance around 87.50, but above 8600, looking for further gains for this market. Moving on to the DAX, which also had an intraday rug pull with the market going below the 23,500 area, which was the March resistance, but managed to close above that, Marlborough above that, looking for the top of the rising trend channel there from April last year, heading towards 24,400 and looking for that by the end of next month. Worst case at the moment is we've got to test the 50-day line and the floor of that gap there at 22,600, but hopefully after that rug pull on Friday, we are out of the woods. Moving on to the Dow, and here kind of filled that gap there down to 41,500 and closed above that. Still above a rising 50-day moving average and still above a neutral 50 RSI at 51. So glass just about half full at the moment, but the big win here really would be breaking back above the old March and May resistance area around 42,800. While we're below that, still feeling a bit vulnerable in terms of potential downside after the great rally that we've had from around 36,600. Moving on to Bitcoin, which is, I suppose, the market at the moment. We're looking for progress above the old January 109,000 peak, but so far we just bull trapped through it, the record level around 112, and we come back from that to settle below 109, which is not great. Ideally, we stay above recent swing support there at 102, and then head up to as high as 121,000 by the end of next month. I think we've probably just about lost our chance to get through 120,000 by the end of May. Other point to note is the way that we've had the golden cross between the 50 and 200-day lines. Very steep one, actually, so hopefully that will provide some momentum once the initial excitement of getting through 112,000 or 212,000 wears off. Moving on to gold, and here still keeping us guessing in terms of the health of the latest push to the upside. We've got that resistance line there from last month running through around 33.90, and we've got the floor of the rising trend channel there around 32.60. If we break back below the floor of the channel, then it's the 50-day line 31.85, which is the obvious destination. Helpful that the RSI is still above neutral 50 at 54, so we are gunning for a break of that 33.90 or 3400 level, and looking for a move to the top of the rising trend channel from March, as high as 3800 maybe by the end of next month. Moving on to the stocks, and given that I covered all the exciting ones yesterday, a sort of rather more down-to-earth feel to the situation, but the gap higher for Corcel, pretty impressive. We're resting on our old initial target there at 0.29. Above that, looking for the old resistance there at 0.45 by the end of June, so that should be exciting enough for most traders. On to Distil, where the charting worked in the sense that we've had the push from above a sideways shuffle, resting above a rising 50-day moving average. Only thing missing now is an end-of-day close through the 200-day line there at 0.14. Above that, looking for up to 0.22 by the end of next month, which is the top of a broadening triangle there from back in September. Interesting that we covered Helix exploration in the Great Request Show during the week, and that built on the break of that 16 pence resistance line from last month. Above 16, we were looking for the top of that channel there at 18. Above 18, we're looking for 23 pence by the end of next month, and perhaps a bit more than that, given the way that The 50-day line is rising well. We've had double and triple bounces off neutral 50. And all that's missing now, I suppose, really is to see whether the 200-day line is starting to rise, because if it is starting to rise, or when it starts to rise, probably in the next session, we would have the run-up to a golden cross. So decent moves there at Helix expiration, with or without large amounts of helium. Onto Jangada, and a decent spike for the shares through the 200-day line on Friday at 0.91. Our initial target here, 1.17. Best case scenario target by the end of next month, up to 1.6 pence. And that is valid certainly while we're above the 200-day moving average. Onto Northcoders, which has had a bit of a rocky ride, but it did manage to close that last gap down that we had at 62 pence and end the week just above. It's a gap close buy signal. The obvious target now would be to fill the gap up to 95 pence by the end of next month, which is also the top of that falling trend channel from back in July. But asking a lot, but while we're above the recent support there at 52 pence, which was the neckline resistance, and the bottom of the gap, then 95 pence could be possible. If you're squeamish, you would just be loyal to that 95 pence target while we're above 62 pence. Onto a stock which hasn't been on the front foot for quite a while, which is Novacyt, and here you can see that we've got a potential rising trend channel base. We've got an uptrend line in the RSI window, hammer candle on Thursday, and closing above the 50-day moving average for the week at 41.5. Looking at the top of that rising trend channel at 54 pence by the end of next month as a best case scenario target, especially while we remain above the 40 pence zone. Moving on to Pantheon, which is certainly not for widows or orphans at the moment, probably created a few. We've had the horrible gap down that we had last month, and then a bull trap semi-gap filling failure that we had just the other week. Current situation is that we've got a bear trap rebound from below the old November support there at 21.5 pence. Above that, probably looking for at least 30 pence, which was and is the floor of the gap. The other point to note is that we just about closed that gap there at 24.95 pence, and want to see an end of day close above that so that we can get that move to fill the gap through to 40 pence maybe by the end of next month. But very volatile. Great fun if you like that kind of thing, I suppose. Renold is next, and here we have the gap above the 50-day line back in April. Also had the break of the resistance line there from June last year, around 48 pence, and we've currently got a situation where we've got the 50 and 200-day lines rising. We're probably about a week or two away from a golden cross, and then we're up to a golden cross as we are seeing at the moment. The strongest part of the cycle, looking for up to 90 pence by the end of next month. Could be sooner than that. Given the current price action, and you can see that we've got support at the old target there at 71 pence, so above the 70 pence area, maybe take it down to as low as 66, the old June peak from last year. Looking for 90 pence on Renold. One of the best stocks of the year last year was Roadside Real Estate, and it looks like it could be a contender for a big win this year as well, with the 40 million share buyback which has been proposed, and we'll find out about that on June the 17th. In the meantime, the charting position is that we're seeing a share rise in step fashion, so up and then sideways, up and then sideways. Just broken the recent resistance around 33 pence, and above that, looking for the top of that rising trend channel from September last year as high as 56 pence by the end of next month. Very, very strong indeed. And in the near term, it's actually left unfilled gaps to the upside. Very strong as well when you combine that with the step price action that we've had. On to Staffline, which is not quite as strong, but still pretty impressive here. Unfilled gaps to the upside in February, and then also, earlier this month, obviously we had the gaps down as well. But the overall pattern here, an improving one. We had an initial target there around 35 pence. Above that, we've been looking for up to 47 pence. And above that, we are looking for a final, inverted commas, target there as high as 58 pence by the end of next month, above the 35 pence level. Still feeling bullish about this situation. On to Tern, which I suppose now with Premier African sort of in a state of disarray. We've got this stock as the main fundraising animal on the small cap area. Here we've broken back above the old gap there, around 1.5 pence, broken up back above the 50-day line, as 200-day line rather, at 1.4. Above that 200-day moving average, looking for 2 pence. But obviously that is fundraise permitting, and one looks back at the news, one can see that the company is very keen on frequent fundraisers, as such as we had back on the 17th of April, and we also had on the 21st of February, and therefore looking for maybe another one soon. The only point is, I suppose you can see there, the company did make an investment in Shore Ventures, which may be the reason why the shares are rising now, if that investment is going well, which would be a bit of a sea change for Tern. Finishing off with Tekcapital, which is also an investment vehicle, and here a very good update last week, I thought, and what's interesting is we've got the second gap to the upside, in fact third gap to the upside since last month, so this is looking very strong and deserves a re-rate, I think. Top of the channel there, up to 13 pence, and we're looking for that by the end of June or even sooner. Just the first hint that we're going to a golden cross there, and that could deliver a decent upside on what you can see. In the good old days of 21 and 22, the pandemic, the shares were way higher than they are now, and arguably the company's done a lot more than it was doing then, or achieved more. That's it for me today. More updates in a normal way during the week.